And I want to show you guys some of the news that we've seen recently. Last Friday, Wall Street Journal had stated that the jobless rate fell to 13.3% and employers added 2.5 million jobs, blowing all Wall Street expectations out of the water. And then because of this great news, mortgage rates supposedly spiked on shocking jobs report. So obviously everybody started worrying like what happened to the mortgage rates. So this morning I had asked a loan officer that I work with, Victor Chow from Wells Fargo. He had sent me these rates. 30 years fixed conforming rate is at 3%. And then 30 years fixed jumbo at 3.25. Yes, it had gone up a little bit, but my gosh, 3.25 I think is not bad for a jumbo loan. And today, it just came out. Federal Reserve had talked about they're going to keep the benchmark interest rate near zero through 2022. This is a historical low interest rate, which if you have a good credit, definitely need to take advantage of it. And it's great that it's going to go through 2022, but because of that, I'm sure that it's going to improve housing, help with the housing. And as you see that Robert Dietz is a chief economist for the National Association of Home Builders, had said that the data lend evidence to the NAHB forecast that housing will be a leading sector in eventual economic recovery. So housing is really a lot of times is the one that lead us out of the economic recovery. So now the question is, how is our housing market right now? I've shown this chart for the past few weeks and just kind of still seeing that you see as soon as our showings resume, which was May 4th, the pendings 2020 has increased quite drastically. And what's crazy is that I noticed by this time, you see that it's matching last year 2019 numbers really closely. So we're really not far behind. And another was like from Santa Clara County Association Realtors that has shown that compared to 1 year ago, let's focus on single family residents for a little bit. This is Santa Clara County numbers. There are, of course, less closed sales, right? Because of the shelter in place. Compared to a year ago, we had 50% less in terms of number of closed sale. However, if you look at the median price compared to a year ago, it still went up 2%. Compared to a month ago, it did go down 1.8%. And the average days on the market, I thought this is really interesting. It's right now it's 23 days on the market. Average days 1 year ago was 24. Average days 1 month ago was 18. It actually stays on the market even shorter because the only reason that you can explain is that there's still demand and then not enough supply. And then here are two charts regarding like how are people making offers. You see that last year in June, of course, they were about 103% over asking price. And then typically, summertime and then towards the end, it's like slowing down. And then before the shelter in place started, the market jumped. Last year, a lot of people have been talking about, we're going to wait until 2020 because the market is going to crash. But then we started off 2020 really strong and the competition was really fierce. And so you saw that people were offering really aggressively. And then shelter in place started. This is like around April time, but then again, the closing in April, that means they made an offer in March, right? So you still see pretty strong numbers. But after shelter in place started, now we tapered back off to about 101%, so about 1% over. So people are a little bit more conservative when they make an offer. And then now this chart goes back to looking at what about the price? A lot of people thought that, well, because of the shelter in place, I bet the price had gone down quite a bit. But this is based on 3 counties numbers. This is Alameda, San Mateo, and Santa Clara County. And if you look at the numbers, the numbers stayed pretty consistent. And then we are still going back to June 2019. And then June 2020 is about $1.1 million versus 1.08. So it's slightly increased, but it stays pretty the same, and then you don't see a huge drop on the pricing. And lastly, this is a chart I want to touch on a little bit on the commercial real estate side. Delinquency rate, again, we talked about, because of this shelter in place, I think commercial real estate would get a big hit. But we've been, a lot of people have been saying that industrial is going to be very strong. So you see that their delinquency rate is pretty good. It's only 1.82 compared to, it's the lowest compared to other commercial real estate asset types. And then the second is the office. And I think one of the sectors that a lot of people are very surprised about is multifamily, because we hear news talking about all the renters, about 30% of renters are not going to be paying rent. We're going to have a lot of property owners probably going to have to go into foreclosure because they're not able to pay for their mortgage payments. But the delinquency rate is only about 3.25%. Actually, relatively speaking, it's not that bad, but it did go up quite a bit from April's numbers. And then, of course, the lodging, which is the hotels and retail, they are getting a big hit. So we will see that there are going to be quite a bit of possibly some foreclosures that happen in the lodging hotel side and also the retail properties. And yesterday, the news biz journals, I came up with this article talking about that they have this proposed California law, SB 1285. Not sure if, Steve, you have heard about that, but they're talking about this could make it easier to pivot to housing on these struggling office and retail properties. So we're going to see what will happen on that front. But definitely on the commercial real estate side that we've been talking about, like there are going to be a lot of probably rezoning or repurposing of these properties to for other purposes. So that is it in terms of for my state of the market report.